last week saw global shares mostly rise, supported by the U.S. Federal Reserve's third consecutive interest rate cut and commentary that was perceived as less hawkish than some feared. Major indices like the Dow Jones Industrial Average and European/Japanese shares finished the week in positive territory. U.S. stock sector movements. Last week, the divergent performance between large cap tech and the broader market led to a rotation into cyclical and defensive names. Other sectors, for example, energy, industrials, utilities, mixed/overall positive trends suggested by the strong performance of the Dow and Russell 2000 as investors rotated from growth to value/cyclicals. Global stock market condition and trends. Monetary policy divergence. The U.S. Fed is cutting rates, less hawkish cut, while the Bank of Japan, BOJ, is bracing for a potential interest rate hike next week, highlighting significant monetary policy divergence. Europe, Eurozone shares rose last week. The outlook for European stocks is improving due to factors like rising liquidity, a supportive ECB monetary policy, and attractive valuation discounts compared to the U.S., fueled by a strong lead from Wall Street before the tech sell-off, and anticipation of a shift in the BOJ's policy. Expected movers up, based on recent analyst or news sentiment. The two stocks expected to move up in the week starting December 15th, based on recent sentiment and market trends. Exchange, U.S. Apple Incorporated, AAPL, held up better than other Magnificent Seven stocks during the Friday tech out. Strong analyst rating, buy, and high market cap stability. Microsoft Corporation, MSFT, strong analyst rating, strong buy. Core business models remain robust despite minor tech sector pressure. UK, HSBC Holdings, HSBA. Strong recent 7-day return, plus 4.7%, and positive valuation/growth metrics relative to peers. GSK. Positive recent 7-day return, plus 1.1%. Pharmaceuticals/health is often considered defensive. Europe, ASML Holding, ASML, part of Granulas. As a key chip equipment maker, it's a structural growth play expected to rebound after recent European underperformance. LVMH, luxury sector. Large cap luxury stocks have potential for a rebound, often seen as a bellwether for consumer health in Europe. Japan, Toyota Motor, 7,203. Strong recent 7-day return, plus 7.5%, and high analyst target. Benefiting from a rotation into value/cyclicals. Hitachi, 6,501. Strong recent 7-day return, plus 2.6%, and high analyst target. Capital goods sector showing strength. Note, European movers are based on the largest and most prominent stocks in the region, using ASML and LVMH as examples of market leaders. Anticipated news for the forthcoming week, starting December 15th. The upcoming week is heavily focused on key economic data releases that will test market sentiment. U.S. non-farm payrolls, NFP, December 17th, the major focus. Given Fed Chair Powell's recent comments suggesting job growth may be overstated, potentially even negative, a disappointing number could cement expectations for more aggressive rate cuts in 2026, boosting fixed income and potentially pressuring stocks on recession fears. U.S. Consumer Price Index, CPI, exact date not confirmed in snippet, but mentioned as coming up. The inflation report is crucial for confirming the path of disinflation following the recent Fed cut. Bank of Japan, BOJ, interest rate meeting, December 19th, high anticipation for the BOJ to possibly hike rates, which would be a major shift in policy and likely impact the Japanese yen and financial stocks. China data, house price index, industrial production, retail sales, and fixed asset investment are all due, providing a critical gauge of the world's second largest economy. Help us to bring you the best content possible. Subscribe, share, like, and comment.
This is the stock market performance playlist, the sound of victory. Peace.